This is our commercial lines team here. You're looking at, between the three of us, we handle all of our commercial lines accounts. Specifically, this is of everything we're going to talk about is geared towards you guys. So kind of bringing in, you surround yourself with folks that are smarter than yourself, and that is what I've done. So kind of taking that a little bit further, Torian and I, we go back to Olivet College. So I graduated from Olivet with an insurance and risk management degree in 2008. And during that time, that's when I first met Torian. He has quite an extensive underwriting background. So he worked for an insurance company for 7 years before joining the team here at Simon Insurance, and it's specifically focused in commercial lines, mid to large commercial accounts. So Torian is handling the anywhere from 15 to 20,000 up on over to a couple $100,000 in insurance premium is where his expertise comes in. Where Katie comes in, she is from Portland, born and raised here. Katie's been on the team now for 4 years and started in personal lines and then developed and evolved from a professional development standpoint and getting into more commercial lines. And for the past several years, she is our small business unit. So when we have smaller commercial policies that come in, Katie is the one that handles the day-to-day of the quoting and executing the issuance of those policies, endorsements, and certificates, those types of things. So yeah, this is our commercial team, and we're going to be the ones handling the presentation today, answering questions, those types of things. So as we kind of get started here, kind of what we're going to be going through is starting out with liability and moving into property, and then finishing up with questions and answers. So we're going to dig into each one of those particular things quite a bit. But I'd like to save the questions and answers for the end, just given that we have such a large group. Typically, if it's a smaller group, we keep it more open discussion, but for the sake of time, we want to make sure we cover everything that we need to cover. But we have left plenty of time at the end, and we're going to be sticking around afterwards, too, to answer extra questions and those types of things if you want to have some more one-on-one time. All right, well, let's kind of get started. I'm going to handle the first slide. When we talk about what is insurance, when we're talking about your premiums, the amount of money that you pay to the insurance company, at the end of the year, how insurance companies work is they will take every dollar of your premium will end up actually getting paid out in some sort of claim. Insurance companies, they operate what's called a loss ratio. So they are making money if they pay out 100% of every dime that they take in from insurance premiums and pay it out in claims. So just giving you a higher level explanation of how insurance works, and then from there kind of where it boils down to your everyday policy and how that applies to you. So if we look at the history of insurance goes way back, even going back to BC, 1700 BC, from when folks who are traders and they're sending ships down the river, and they what could happen? It can get stolen, it can get sunk in the seas, it can stuff can get damaged. So what would happen if one boat went down? All of these different traders, they might lose out on all of their products and services. So what they did is start separating into smaller boats, and so if they lost one boat out of 10 boats, it's not as big of a deal if they lost the whole thing. So that's kind of ancient days, and you fast forward all the way up and getting into farming, and now we have the transfer of actual risk of auto insurance, of homeowners insurance, commercial insurance, those types of things. So, why do I pay insurance, and how does that work? Well, insurance is the transfer of risk. So I know that if I go out and injure or kill somebody in an auto accident, that there's going to be repercussion from that. There is going to be a lawsuit filed, those types of things. So if on my auto liability limit, I'm going to pay the insurance company to assume that liability. So if you may have a $500,000 liability limit on your auto policy, I'm going to pay the insurance company to assume that risk all the way up to that $500,000. So, and that is what you're paying that premium for. Same thing for your property insurance, but ultimately there is, it's called self-insuring. Every single part of every policy out here, you are self-insuring a piece of that, your deductible. So self-insuring, what that is, that's the portion of your policy that you pay out-of-pocket costs for when a claim happens. So we're going to get to this a little bit more, but just keep this in mind as we go through the presentation of, is it worth it? The paperwork that's on your desk right now is some flood quotes. An example of flood quotes right down here on Kent Street. One of them is $17,000 a year for flood insurance on a $500,000 building coverage. So when we talk about self-insuring, do we want to pay $17,000 a year after year after year for when the catastrophic event happens, or do we self-insure that? Meaning I'm not going to pay that $17,000 a year, and if something does happen, well, that's my self-insuring part of it. On a big scale, all the way right on down to a little scale, this is a very kind of higher level overview of how insurance works, how premiums work, because every premium that you pay in will go out to that insurance company to pay a claim. That's just kind of how insurance companies, they've been open for hundreds of years and how their process is set up. So with that, we're going to dive into some property insurance now, or excuse me, general liability. I'm going to have Torian kind of take the reins here. Torian, if you don't mind, I'll...
Yeah, so again, just to reiterate what Mike said, thanks everyone for taking time out of your day this morning to sit with us, have lunch with us and everything like that. So we do truly appreciate it. Just to kind of break down a little bit of general liability to you, whether you have, every business has a general liability exposure. Whether you're a yoga studio, a manufacturer, a grocery store, you've got a general liability exposure. And when you hear liability, you want to think defending myself in court and paying out anything that I'm found liable for. So an example of that is, say you own a grocery store, your general liability exposure, the largest exposure that you have is a slip and fall. You have a lot of foot traffic coming through there, but you also have a products exposure because you're selling a product that people are taking home. They could get sick on it, they could choke, they could chip a tooth, anything like that. And if someone wants to bring a lawsuit against you as a business owner, that's when you call onto your general liability to, one, defend you in court, and two, pay out any damages that you're found liable for. So just to kind of break it down, when you talk to people a lot of times, I come across situations where folks don't really know what their insurance policy really has or what it really does. One thing that I hear a lot of time is that I've got insurance, I've got coverage. Well, what does that look like? There's different lines of coverage that act together to protect a business. So your general liability, if you take a look at your policy, you're going to see a section that looks like this that has the limits of insurance. So these are the amounts that the insurance company would be willing to pay out if you need to defend yourself in court or if you're found liable for any of those damages. So your general aggregate, right across from that, is a $2 million limit. That means that you have up to $2 million for the entire policy year. No matter how many claims you have, that limit would max out at $2 million per year to defend yourself again and pay out anything you're found liable for. Products completed operations, again with the grocery store example, you do have a product because someone is coming in buying groceries from there and taking it home. But completed operations is something like if you're a contractor and say you're building a balcony onto another building, or you're building a ramp, or basically building any type of thing that you're leaving at someone's facility or home. That's going to be your completed operation. So if something fails, if you're building that balcony and it gives out within that next year, and someone decides to bring a lawsuit against you, you'd have up to $2 million for your product that you're selling and your completed operation. Personal and advertising injury is an interesting one. So if you run any type of advertisement, say you're a landscaping company and you say, your advertisement says, well, XYZ Landscaping does so much better than ABC Landscaping. Well, ABC Landscaping doesn't really like that ad, and they feel that that's taken away from their profits. So ABC decides to sue XYZ for their advertising because they now have an advertising injury against their business. You ran a marketing ad, that specifically named our business. Now our profit margins have gone down. We're going to sue you, and so XYZ would then have up to $1 million to defend themselves in court, pay out anything they're found liable for. Your occurrence limit just means for each claim. So every time you have a claim, it would pay up to $1 million, up to $2 million for the year. So essentially, if you have $2 million claims in a year, you will have exhausted your liability limit. No more coverage if you get sued for the rest of that calendar year, or that policy term, actually. So insurance policies run 12 months no matter when you start it, as far as commercial goes. So that's what I mean by policy term. If you start it October 31st in 2019, it's going to end October 31st, 2020. Damage to premises rented to you. This does not necessarily apply to every business. But there's really no way to get rid of it. It's a built-in coverage in your general liability. So if you are renting space, say you are a cell phone sales store and you're renting the unit that you're in, one of those cell phones or your computer or something like that catches on fire and burns up that unit that you operate from. Well, that landlord who owns the building is going to say, it wasn't my computer that set the building on fire. Do you have damage to premises coverage on your policy? So there you would be able to pay out up to $100,000 to that landlord for the damage that your unit did to their building. And the $5,000 medical expense, that is a coverage. It doesn't necessarily require a lawsuit. This is something where, again, with that grocery store example, your biggest exposure is foot traffic. So if someone comes into your store, twists their ankle, they've got some medical expenses associated with that. They come to you and say, hey, Mr. or Mrs. Business Owner, I twisted my ankle, I have some medical expenses, I really don't want to take you to court. Is there any way we can figure this out? So then that business owner would be able to then file a claim up to $5,000 to pay any medical expenses. Now, it's not limited at $5,000 because you still do have this $1 million occurrence limit. So if they get to $5,001 or more, it would just spill over to your occurrence limit, and you would then, again, have up to $1 million to cover yourself. So that's basically a basic breakdown of how general liability works. Now, along with general liability is a coverage that we bring up to pretty much every client that we have. If you are hiring, if you have employees of any sort, your agent needs to be talking to you about employment practices liability. It's the number one of the top claims. I'm not sure if it's number one anymore, but it's one of the top claims that we see on the commercial side of things. And this is essentially if you're hiring someone and through that hiring process or interview process, they feel like they weren't given a fair shot. Or maybe you have an employee who constantly comes in late, violates the dress code, you end up having to fire them. Well, they say, they didn't fire me because I violated the dress code. They fired me because I'm a male, or because I'm a female, or because I'm black, or because I'm white. Anything like that, if someone brings a lawsuit against that owner, their regular general liability is not going to pay their defense costs in court to defend themselves. So employment practices liability, unfortunately, is a very important coverage. I say unfortunately because it's just kind of the society that we're in these days. A lot of people are looking for a handout and trying to take anyone to court for whatever reason they can, avoid working at all costs. So there's some interesting stats on here. The average cost of settling out of court is about $75,000 versus filing that claim on your insurance and paying maybe a $500 deductible, and then they pay out up to $1 million. Average jury, so if it goes to trial, the average jury award is $217,000. So back to that point that Mike said, if you don't have employment practices liability insurance, you're essentially self-insuring that portion of your business. So if you are brought to court for something like this, you have to pay that $217,000 out of pocket. So that's essentially the way that employment practices liability works. Again, it's unfortunate that it's something that we have to think about, but it's a very important coverage. We see the claim over and over again. And if we are not currently your agent, you should be talking to your agent a little bit about that. Another very, very important coverage that is not included in every commercial insurance policy is business income and extra expense. So if you have a fire, perfect example of this picture right here, you have a fire at your facility, that's a covered cause of loss. So now your building is being repaired. You obviously are unable to operate from that facility while the repairs are going on. Well, as a business owner, you still have expenses associated with owning that building, owning that business. If you have employees, you have payroll that still needs to be made. Even though those employees aren't working, once you have the construction and repair done to that facility, you want to bring all those folks back. You hired them for a reason. They're doing good for your business. So the way that business income works is you have a covered cause of loss like a fire. For that period of time while they are restoring your facility, this coverage will take the average of your gross monthly income that you're making as a business owner, and it will pay you that loss of income. So for 30, let's say 30 days, they're repairing your business, you're unable to operate as you normally would. Those 30 days, your doors are closed, and you can still pay all your bills that month. You can pay your employee payroll, and pay yourself if you need to. Obviously, as a business owner, a lot of times you're the last one getting paid, but you've still got expenses that need to be met. Food needs to be on the table, the lights need to be on. So what do you do in that situation if you don't have business income coverage? Essentially, you're self-insured in any of those expenses. If you want to keep those employees on staff, you're going to have to pay their payroll out of pocket, but that's what this coverage is for. It does go by, there is a certain coverage that goes by the average of your monthly income, or you can limit it. If you just say, hey, I want $100,000 in business interruption, that's basically if you have a 6-month loss, a 6-month restoration, you're saying that I'm comfortable just taking $100,000. Or you can have what's called actual loss sustained, which just goes by the average of what you gross monthly. They'll take a look at maybe a year or two of tax returns and say this is the average that you grossed every month. We're going to pay you. Say you average $30,000, then you say here's $30,000 check for each month that you're out of operation. So that's kind of a high level understanding of business income. In the Marine is just kind of a fancy way of saying tools and equipment. This is also a very important coverage, not necessarily built in. If you have, a lot of times this is confused with property coverage. So if you have property coverage, meaning your building and personal property inside that building, that coverage is limited to that specific address. So any of the property that you own that's listed under your scheduled property is limited, the coverage is limited to that actual address that correlates with it. Now your inland marine or tools and equipment gives coverage for when it's in transit or traveling. Maybe it's left overnight at a job site. A lot of that large equipment, if you're a contractor, you're not trying to bring it back and forth. You leave it on a job site, it gets stolen, it gets damaged. You file a claim, it's going to be paid out up to that limit that shows on your on your policy. So if you have larger tools that are really valuable, say you have like a $20,000 welder or something like that, or lift or hoist or something like that, you would specifically schedule that at the limit, so you would put $20,000 on it. But if you have smaller tools, a lot of people travel with $10,000 of tools that each one of those tools is not valued more than $50, $100, $200, something like that. You don't have to schedule those. It's called miscellaneous tools. So you just say, I've got $20,000 of miscellaneous tools. All of them are valued under $2,000 individually. There's no questions asked when the claim is filed. They're not going to say, oh, well, this hammer wasn't listed on the policy. It's blanketed under miscellaneous tools. So that's the way that inland marine and in transit works. And onto the property portion, replacement cost versus actual cash value. It applies to the valuation that you're using on your actual building that you own. So replacement cost is essentially replacing old for new. You have a building, it burns down, you want to replace that building up to the actual appraisal value, you would want replacement cost. If you have an older building and you're like, it's not really top notch, it's really not the greatest, if it burns down, I don't need for it to be, the best thing on the block, you would use actual cash value, which is a valuation based on depreciation. There's a couple other portions on this slide that Mike is going to step in and detail a little bit further for you guys.
Here in Portland, we have some older buildings that where a lot of times you go buy a building, oh, let's insure it, I bought it for $100,000, I want $100,000 worth of coverage on that building. And we're talking about the buildings here on Kent Street that are several stories, brick buildings, that $100,000 is not going to come anywhere near to replace that building. You know, if there were a fire that went through and there were reconstruction costs that came in, there, $100,000 is just not going to do it. So I suspect that a lot of buildings here in town are insured on an actual cash value basis. So what that means when you're insured on an actual cash value basis is depreciation will apply upon a loss. So if you have $100,000 insured on your building, but you should have insured this building for $200,000, for instance, the insurance company is going to penalize you for this. So if you've heard the stories in the past of, oh man, them horror stories that get put on the news, or the insurance company, they didn't pay me out for peanuts on the dollar of what I actually have on my insurance policy, 9 times out of 10 it's because of actual cash value. So it's the fact of, and this is something for you guys right now, is to go back and look at your insurance policies. Because if you own a building and you have it listed as actual cash value, there are a couple endorsements that you can put on to eliminate that co-insurance penalty. But ultimately, I want to show you a couple of examples. So there is a formula that insurance companies use on how they settle actual cash value policies. So it's what you did insure the building divided by what you should have insured the building times the loss minus your deductible. So that's the formula. So let's look at it. Amount of insurance carried versus replacement cost. So in this, for instance, they carried $3 million on the building, should have been insured for 90% of $5 million or $4.5 million times $1 million loss. This is what they're getting, $600,000. But wait a minute, I just had $1 million loss. What do you mean I'm only getting 60% of that loss? So, actual cash value. That is, I mean, the things that we're going over right now, the business income, these are make or break coverages. Actual cash value. This is make or break for your business if you want to reopen after catastrophic events and insurance to work the way that it's supposed to work. You want to make sure that you have replacement cost endorsement. Replacement cost, the insurance company is going to make you insure that building. I just bought this building for $100,000. I want to insure it for $100,000. Well, let's think about it. I want to get my full amount of money if this thing burns down, so I can put a replacement cost endorsement on it, and it might cost $600,000 to rebuild that building. What you bought it for is different than the replacement value. So we would then have to insure that thing for $600,000 for the replacement cost of what it would be, even though you bought that building for $100,000. Replacement cost eliminates co-insurance penalty. Agreed value eliminates co-insurance penalty. So if you're one of those people that I have my building insured for $100,000 because that's what I bought it for, call your agent, tell them you want agreed value instead of actual cash value. Agreed value eliminates co-insurance penalty. I've got that building insured for $100,000 and it totally wipes out. The insurance company's going to write you a check for $100,000 by one endorsement. And the average person, the average business owner, they don't, and even a lot of times the average insurance agent do not understand this stuff. So the folks who you might be writing your $100,000 policy for, and then when it burns down, you find out after the fact that you're only getting $600,000 for that $100,000 loss. So very important stuff of what we're going over. We're almost to the flood part. We wanted to kind of really hit some of these heavier hitters before we get into more of the flood details. All right, so before we get into flood, we're kind of shifting gears. So this happened, or this covers what we're talking about right now. If you're one of the affected buildings here on Kent Street or the surrounding areas, this coverage here could apply. So when we talk about water and water claims, the first thing we ask is how's the water get in? Because that's going to determine coverage. You can say I've got 4 feet of water in the basement. Well, that's horrible. But really, in order to find out if there's coverage there, how's that water get in? So wind is a covered peril. Wind blows your roof off, all of a sudden you have water, and now you have 2 feet of water in your basement. Every resulting piece of damage is covered because wind was the original peril that caused that damage to that structure. So when we talk about hurricanes, for instance, or even, you know, the flood, well, what happened first when that hurricane hit? Did that hurricane rip the roof off that house and then the resulting water cause that damage? Or was it the storm surge that brought in the flood that caused all of that damage? Flood's not covered. Wind is. So these, when you kind of see these nasty battles that happen in the Gulf states with insurance companies, that's what happens. So when we talk about perils and when we get into flood policy, a flood policy is the only policy that will cover a flood. You can have general liability, property, inland marine, you know, all the endorsements in the world, but it's not going to cover a true flood. So what we're talking about here is water backup of sump pump or drain, sewer drain. And this is a bell and whistle coverage. So this is not included under a standard homeowner. This is not included under a standard commercial policy. This is something that has to be specifically endorsed. It's not very expensive. But when we look at year in and year out of the claims that we have right here in our office on Maple Street, this is the #1 claim that we have year and year and year on the property side. So other than auto accidents, this is the next highest claim that we see. But it's a specifically endorsed claim. So we offer this coverage to all of our policyholders. And if you don't want it or you reject it because it's too much, then we have you sign off on it. Because odds are something like this is going to happen. So water backup, it's not covered under a general policy, but it can be endorsed onto a policy, and you don't have to have a very super expensive flood policy. So what this covers is in the instance where rainwater happens, or however the sewers get filled up with water, whatever is in there, and all of a sudden there's no more room for any of the rainwater to go. Or, you know, if we're talking about backup of sewer drain, if it never flooded here, but now there's nowhere for that water to go where it used to drain into the river, it backs up into my basement. Now I might have 3 foot of water in my basement because of the sewer or drain backed up. Totally different than flood. You have this endorsed on your policy, you should have coverage for this. Let's see, anything else I want to cover on that? So keep this in mind. I'm sure there's going to be questions on this here. Water backup of sewer drain, another one, check your policy. This is something you should be endorsing it to your homeowner as well as business policy. All right. Well, we are going to transition a little bit to flood. I'm going to have Katie kind of take the floor here a little bit. But
Right. So obviously this is something a lot of people are uneducated about, is flood. So flood, this is the first time it's flooded here, like majorly since what, about 1951 I think was the last one. So a lot of people just never really thought about carrying it. It's not going to happen to me. Well, obviously things happen. Here we are. So this is where it's important to, with Mike saying, talking about like self-insuring. If you look on your tables, I have 3 separate flood quotes that I looked up for this. The first one should be, I used a business address right off Kent Street, so I, just FYI, found all the information on the county website and got a quote for it. So if you look at the bottom, it says standard. So that means this building is in a flood zone. Mike, do you have that map?
yeah.
So I have a map too. I found it off FEMA's website, so it's actually really interesting. Is it here?
Zoom in.
Yeah, zoom in. Like right around here. So this area, I can't really see.
There you go.
This area, this blue zone here is a flood zone. So if you take a look, it's really hard to see, but the back half of all of these buildings are in a flood zone. The front half is not. So even if there is 1 inch of a building in a flood zone, it should have a flood policy. So this quote, standard, that means it's in a flood zone, even if it's just a parking lot. I quoted this with the building coverage of $100,000. That is lowballing it. With a $2,000 deductible and then $10,000 in contents coverage. That 1-year policy is $3,105. So this is where self-insurance comes in. You got to think, if I pay this $3,000 a year, this doesn't happen again for another 10, 15 years, how much am I paying? So, I don't know, it's a tough thing. It is just a tough
Can you
thing.
show them where City Hall is? That marker is our office, so City Hall's right there. So you can kind of see and where we are at from the bridge, where we're at. Well, show them the Kramer building.
This is Green River. This is Bridge Street.
Show them the Kramer, where the Kramer building is kind of part of Kramer building is
Right here.
Right here. So, it gives you this is easily accessible on the FEMA website. You can zoom in wherever you want. You can go all the way down the river. I just typed in Portland, Michigan, and it pulled me to downtown. Yeah, this orange zone here, it's not technically in a flood zone, but it has a 0.1% chance of flooding in a 30-year time period. So basically, any property off Kent Street past, I think Windy Brook bought it where the smoke shop used to be. So anything over there is going to be in this orange zone, including my house. The next paper is, I came up with a value on what it could cost to replace the building. It's still pretty low considering most of these buildings are brick. But as you can see, it's in a flood zone, and it's $17,000 a year. That's every year. So
What's the difference between those two?
it would be the building coverage going from 100,000 to 500,000.
Okay, so oddly enough, the ones that you're showing us that are in the flood zone are not the affected buildings, other than the Kramer building. The ones that you're saying are not in the flood zone are the buildings that are affected.
So the buildings that have been affected, part of the back half of the building is in a flood zone.
No, keep going up the list where the yellow is.
Right here?
Those are the buildings that are affected.
Okay, I was unaware. Is your building affected, Nick?
No, I don't have a basement.
Okay. So, I can't see on this. Can I look here?
Yeah.
It's hard to see it on here, but there is partial buildings here in the
Blue
back.
behind it.
Yeah. Again, it's hard to see it up on a wall blown up, but this is readily available. You can type in your own address too. So,
And then, Katie, so if you get a flood certification, that kind of clears it up too, correct?
like a certificate, like flood certificate.
Right, have a
evaluation?
surveyor come out and
Yeah.
actually give you elevations on your building, and
Yeah.
because we did that with the Kramer building when you bought that 4 years ago,
Mhm.
to actually know what level that door was in the back, to know how close he was, and that reduced his insurance by knowing exactly what level of that.
Yep, it'll
back
give you,
door.
so these quotes here is, again, it's based off the building. So this building it's connected to another building, but that building may be half the price. So again, it's kind of, the only way we can determine it is by getting a quote on it, because the flood companies have software that they can pinpoint exactly that location.
Yeah.
And if it's in a flood zone, what's the likelihood? Here's your price.
Because also in that 100 block, the Opera block on the riverside, all of those basements are at different levels.
Yeah. So
And
each
the
one
flood
would be
certificate,
different.
like Nick was saying, some of the company software, but if we can get that certificate, it does cost some money to have that survey done, but then we can take it back to the underwriters and say, this is this particular building's elevation, here's their building, those specifics that are needed in order to fine tune a rate. And flood insurance, when we talk about it, it is regulated by FEMA. So these flood zones, if you're in a flood zone and you're purchasing that insurance right through FEMA, there are independent private. You can go to the Simon Insurance Agency or down the street somewhere else that offers flood insurance, and if you're in a flood zone, the rates are going to be what they are. The difference in determinations are going to be the contents coverage, the building coverage, those types of things.
Okay, so moving on. So this is also a really good quote to look at, the third one. So this was actually a quote I worked up for one of our customers. they live in the condo complex that was flooded out. So there are a few of them that are technically in a flood zone and some of them are not. So if you look at on here where it says rate method here at the bottom, this is preferred. That means they are not in a flood zone. So for coverage on their building of $150,000, contents coverage of $60,000 with a $1,250 deductible, that is only $415 for the entire year. A little more reasonable because they're not in a flood zone. If they were in a flood zone, that's what this bottom section is. That's how much it would cost if they were technically in a flood zone. So as you can see, it's almost triple the price. So the best way to get a quote on insurance is to get a quote on insurance for flood. It doesn't hurt. It's something to just see what it comes back. Again, like Tina mentioned, all basement levels down there are different. Not every premium will be the same. We did attach an application for flood if you're just interested to see what it would be per year. We're more than happy to do that for you guys. The only important thing is deductible. Deductible also will determine pricing. So if you have, a pretty decent quote and you want to self-insure a little more with a $5,000 deductible, that will bring the yearly premium down. And then I also grabbed a couple of these from downstairs. I don't know, most of you are probably aware that the Portland Community Fund does have a disaster relief program. There are applications downstairs. I have a few here, so if anybody wants to take a look at it, Evelyn probably has more information than I do, but they are available.
Evelyn, do you want to say a few things?
I'll say a few things. Come up here real quick. It's open to businesses as well as individuals, organizations. So even though you're a business, the co-treasurer and I tried to go down Kent Street, and then Tuckhead, the bridges closed and there were whiteouts, so we didn't make it over to Conflicts to hand them out directly to you.
We got them.
Okay.
Came in here.
All right. And, but we can do one per address. However, we know that some of the buildings have tenants, and if they're affected, they can apply too. Our priority is to help people with damage first. And right now we're doing it up to 500, because that would, with how many of the cities calling us, homes and businesses that are possibly involved, that'll kind of deplete our funds. So we have a fundraiser on March 1st. It looks like it's going to be big. So far we have many businesses that have contributed to serve up to 500 hamburgers. Usually it's only 200. So many people outside of town even are contributing. Businesses. We extended the time. VFW suggested opening it up at 3 o'clock. So we're hoping if, McDonald's has already shut off their jar, they met their expectations more than they thought to match for donations. So what we're hoping is, right now the deadline on the application says February 22nd. If the second or third jam of ice is coming through like Tut says and does more, obviously we'll have to extend that on the application. But please don't hesitate, fill it out. And if there's enough money to go around after the applications are submitted, we even intend to walk up and down the main street she had on there to the businesses we know that have been affected. Make sure they've done an application if it's after the deadline and we don't have it on our list. And then if there's extra money that's been donated to us, we will give it out to the people affected. So, I don't know, does anybody have any questions?
So with the application, if you think there's going to be, it's going to take a while for us to understand all the damage, and I'm sure that's the case with everybody.
Yeah.
Should we just submit the application, and then if you guys need additional
Absolutely.
information, maybe we can provide pictures and things after that?
Yeah, and with yours, for example, it's obvious. It's
Yeah.
on the newspapers, we have pictures.
Okay.
So just send it in.
And there's there's a set amount that you're giving.
Yeah, right now, it's up to 500. However, with this burger night and with what McDonald's is giving and all these independent fundraisers that are coming through us, you know, if we have more to go around for certain devastating businesses or homes, we will definitely keep it.
How does this work? I rent my building from Jeff. So how does that work with it? He's going to get fill out an application. Can I also fill out an application?
Did you have property damage?
Yes.
Yep,
Most of the stuff in the
turn it in.
basement is mine.
Regards to flood insurance too, you can get a flood insurance policy based only on contents. So if you do rent a building, that would cover just your contents, not the building itself, which would most likely be cheaper as well. So,
But if you have a deductible on that, apply it. Put it towards your deductible.
So how does that affect when the damage is in the basement and you have flood insurance?
If
Our
you-
renter says that he had renter's insurance, but it didn't cover what was in the basement.
So because it is a flood is not covered on any kind of renters or homeowners policy. It will automatically be excluded. So that would not, any contents he had in the basement would not be covered.
Now, we do have flood insurance on it, but it also says it doesn't cover the basement.
Because it's not your property. So,
It's my property, it's
is
my
it
property.
his stuff in the basement or your stuff?
So what was that again?
Whose stuff is in the basement?
Our furnace, our water heater?
Okay, and they said that wasn't going to be
Well,
covered?
that was, it's just rumor right now, but that's what the rumor is. So I was just looking for clarification.
As long as you have some contents coverage on there, I don't see
And I
why.
think there is like the 10,000, so.
Okay, the only other thing I can think of, which it should not apply, is this here. I did ask one of our companies how claims work with flood, because it's not something that we usually have to deal with. So they let me know that they help clean up the water, but the catch with flood insurance is it has to affect more than one lot. Or if it's like a home, it has to be more than 5 acres. So with what we have going on here, it's obviously affecting more than one lot. It's multiple. So I don't see how that would apply either.
Yeah, do you know what your deductible is?
Yeah, on that one, it's $1,000 deductible.
Okay, yeah, you should be working just with your adjuster if they've already assigned you one. But if you have coverage and the policy's active, I mean, you know, this is why you have the flood insurance. So, I don't know if you had an adjuster reach out to you yet.
Well,
Just- but
they gotta
can't
be able to
do
get to
anything
the
at this
basement.
point, Yeah.
Okay,
And
They've
the
been
guy
out.
that came out wouldn't give any details, so.
okay, yeah.
So we actually have 2 in that position. One's on this side and on our side, on this side, our building, it was pushed up through the drain.
Mm-hmm.
So is that still considered flood or is that considered?
No, so if it came in through a drain,
Through a drain.
yeah, I mean, then that other slide that we had up there is going to be, you know, if you had your policy endorsed to have water backup of sewer or drain, it's a whole different peril. So,
Well, it's not really a drain. What's happening is your water level comes up. So what is it called? Hydraulic pressure. So what it's doing is seeping its way through a vein in the ground. It'll come right up through the cracks in the concrete. You may not even know there was anything there, but it pushes itself right on through.
Yeah,
On the
so-
flood levels, when they do elevation levels, it's a penetration through the wall. So there's 2 windows going out the back. That is the top portion of your flood. Well, the water never reached to that. There was still 2.5 feet below that. But it came in like everybody else down the block through the concrete.
okay, see now that is a whole another set of, so my house at home, I've got a leaky foundation. Every time it rains, I get puddles of water in my basement. And, you know, I own the agency. So I know that is not covered. Water seeping in through a foundation is a wear and tear kind of a maintenance thing. Insurance companies will not cover those types of instances, even if you got 5 feet of water.
Yeah, but we're not talking about coming in from the side, we're talking about coming up through the cement.
But it's not really through a drain either. You
Okay.
can't really say
Right.
drain
Some of
because
them-
that...
some of them are for drains.
Well, that's
If
what
if
we
it was a
had
drain,
too.
it's
Never
covered.
went on
If
for.
it's
Right.
through the concrete,
Yeah.
it's not going to be covered.
Okay.
What if it came through a drain?
If it came through a drain and your policy has water backup of sewer or drain, covered up to the limit that it says.
Would it probably be best to just call the insurance company and
double check.
Oh, yeah.
Absolutely, yeah, for sure, and lean on your
Put a drain
agent too.
cover on the
There
wall.
are some of you in here are insureds of ours, you're clients of ours. So, when those types of things happen, these are the conversations that we're having with our insureds. And you should be leaning on your agent and whoever you have your insurance with. Because these are the conversations, in this business, sometimes we don't, the information that we relay is always not the things that you guys want to hear, but it's at least we're giving you an honest answer, and we're going to tell it to you really how it is and how it affects you, and give you the best possible case to hopefully it can be covered, and since you guys know if it's, and just be prepared if it's seeping in through concrete or through foundation or floors. Now drain's a whole different ballgame. So when you guys are getting these estimates and these plumbers, they need to let them know and say, hey, make sure this water didn't come in from this drain, because that could make the difference between having the whole thing covered and the whole thing not covered.
And claims are a hard animal for
Yeah.
agents anyways, because we are not trained in claims, we're trained on policy. So somebody will be like, hey, is this covered? Well, if it's something I'm like, oh, it could be, but it couldn't be, I will not give you a straight answer. I will try to find out through claims, or we just got to get a claim set up so somebody can come take a look at it, a professional. So it's not always something that's super easy to determine. Again, with the whole.
Yeah, the insurance companies are ultimately the ones that pay the claims. So, you want to make sure that you're having great lines of communication with those folks. And then the adjuster, they're not the experts. They're not plumbers. They're not contractors. They're not, roofers. So they rely on the expertise of that plumber that you call. So they're going to get a report back. The adjuster's going to come out and look at the damage, and they're going to go, yeah, it looks like there's 3 feet of water in here. So now we need to get a plumber in to figure out how that happened. Did it come through the drain? Did it come through the walls? Kind of evaluate the damage. So step number one, if you have that, I would immediately pull up your policy and look for the water backup of sewer or drain for any of those folks. If you have a drain in there, that's, now you need to get a plumber or a professional in there to give their opinion on, did this water come through the drain or seep into the foundation? Foundation is not good. Drain is at least going to give you a fighting chance. Other questions?
So what most agents will do is say, you have flood insurance, run it through flood. They won't touch it until the flood people get done with it, is
Yeah.
what I'm finding out. But then you obviously have a higher deductible for your flood because it's so expensive.
Yeah.
So the only way you're going to come back on structural portion is if that building sits there without any heat and your pipes burst and things like that, then that's covered.
Well, it all goes back to the original peril. So if the flood caused the building to flood and then it hit your electrical box and made the power go out, and all that original peril of flood means the rest of it's not covered. So if your pipes burst because it let the building temperature get down, none of it's going to be covered. It is all goes back. So if the same kind of thing, that tornado comes and rips your roof off your house, all the resulting water damage that happens, every dime is covered because of that original peril of wind being covered.
Any chance they take into account the fact that you turned it off personally to ensure that there wasn't any fires or things going on of that nature?
So is your question, are they going to cover the flood?
No, like pipes bursting, for instance. In our house, we turned our power off because there was some weird stuff, like lights were being illuminated
Gotcha.
that shouldn't have been illuminated, all that kind of stuff. So we had the city turn off the power.
Yeah.
We were trying to stop further damage.
Trying to prevent further damage. In your instance, if that would have caused the pipes to burst, then yes, then that's fine, because it wasn't the flood that turned the power off. It's a peril. So the human error, if it is covered peril. If I'm trying to cut down my tree in my front yard and it falls on my house, that's covered. That's covered. So if I turn my heat off in my house to try and prevent further damage, and then the pipes burst, that's going to be covered because it wasn't caused from an excluded peril being flood. So if that damage was caused by flood, all resulting damage after that is not going to be covered. It all boils back to that original peril. So we had a burst pipe over here right before the flood came. So they call it like, I hear running water. Yes, there is standing water in my basement, but there's a pipe burst. Flood is not covered. burst pipe is. So what we're fighting right now is that pipe burst before the flood happened. In fact, we can, so now we're getting contractors involved and say, well, you prove to us that this pipe didn't burst beforehand. So when we talk about, all right, what that peril, whatever peril is going to trigger coverage. Burst pipe, covered peril, resulting water damage is all taken care of, whether you have 8 foot in your basement. It's
And days back on, you and I discussed this previously as well, there had been some implication or rumor that if this is not truly a flood, the water has not come anywhere near flood stage levels. The peril is the ice jam, which causes water to go places it was never intended to go, would not have gone without the ice jam. But that's still considered a flood.
Yeah, because the ice jam is, so the ice jam is what caused the water to back up. Even though it didn't get to flood levels, it didn't get to that, but people are experiencing floods. And so then it all boils back, even though the ice jam was a mile down the road or whatever, and the resulting damage, it's still considered a flood, even though it didn't hit flood levels. The insurance company is going to look at that as it's not a burst pipe, it's not water coming in through the drain. There's more than 5 acres affected, there's more than one lot. So in our opinion, that this is a flood, because there's no other way to classify it. The burst pipes are covered, water backup, sewer drain is covered when you have that bell and whistle on your policy. And even check your homeowner policies. This is, you can have these same coverages, water backup, sewer drain. You have a finished basement, we automatically will apply that to your homeowner policy. So these are things, just double check your policies. The number one claim that we have year in and year out is that water backup through a drain. And so.
You don't have to carry flood insurance to carry that, right?
Nope, you do not. Flood is provided through FEMA.
In a situation of that burst pipe having happened just before the flood, and trying to trace back to the original peril, where does the burden of proof land? Does that land on the homeowner or the insurance company?
That is going to be, the insurance company is going to have to prove that, that the flood happened first. So, and that's done through contractors, and because again, the insured is not an expert. A lot of times the adjuster is not the expert. It's we got to rely on the testimony of boots on the ground that deal with this kind of stuff.
Okay, so what I'm hearing is, if you have flood insurance like you're supposed to, you have water backup, sewers, and drains, you still have a gap in coverage if it seeps in, like, through the foundation. There's no way to cover that.
There is, to my knowledge, there's no way to cover that.
What does flood insurance cover?
Flood insurance covers your structure.
A normal flood, not this kind of thing?
No, it covers this. If you have a flood policy.
It'll cover if it comes in above surface level. So windows, doors.
It's not coming in through windows and doors.
Is it coming in through foundation?
Right.
Or are you not
drains
sure?
that were built when the buildings were built and go to the river.
And being downtown, a lot of those places are over 100 years old. There was never concrete in a basement.
Right.
And a lot of them back over here, I have a couple of buildings, there's dirt. So what they did is they just run an 1.5 inch top coat of concrete. Your water comes in, there's not even a drain there. It's just coming in, and wherever it's the weakest, I took pictures where it was just bubbling through, and until the water level in the river went down, did my water level go down. All I was doing is recycling the water.
For sure.
So I had a plumber come in and said, well, there's no drains.
Yeah.
If you would have concreted it, it just would have come across your dirt floor.
And a lot of that goes back just because of how old the town is and the ordinances and the laws of the building codes and those types of things. That
So
building
even if
is.
you're spending $3,000 or $15,000 a year on flood insurance, unless it comes in through your water, through windows or doors.
It's very specific coverage.
No, it is covered.
Flood is a very specific coverage. Just like water backup and sewer drain is a very specific coverage. It only covers those two things. Your sump pump stops and water backs up through your drains. That's it. Flood.
Okay, so it floods because of cracks in the foundation or what he's talking about right there, and you carry flood insurance.
Not covered. Yep, because it seeps through the foundation. I mean, it is. We're unfortunately just stuck in the buildings are so old that the water seeps in. I mean, right now, with all that drain, my basement is still wet. I mean, it's not to the extent of what you guys deal with, but I don't even bother turning it in. I already know it is not covered. It is, seeps in through a foundation. It's a maintenance issue. Maintenance is not covered. It's not a covered peril. So the insurance companies, even though it's a 150-year-old building, the insurance company's still going to look at that as a maintenance issue because water's coming in through the foundation when it shouldn't be. Now, if a tree fell and cracked the foundation and now we've got water coming in, falling objects is a covered peril. So again, it all comes back to the original peril of what caused that damage. So if a tree cracked your window and now all of a sudden the flood waters come in, it's not a flood because it was a fallen object that caused that water to come in.
But they declared it a flood. The ice caused the water to back up to create a flood.
For sure.
So I guess I'm not following what you're saying.
So if you have a flood policy,
Yep.
it should be covered. Other than,
I guess I was
have your,
understanding you that flood insurance is not covered, but
well, if you have a seeping in through a foundation, so there has to be that occurrence. So coming in over a window, through a door, that type of thing, that's getting the water in there. And if it came in through a drain or through your foundation, don't expect them to cover it.
But if you have the rider, the separate policy, and it came in through your drain, then it would.
Some pump with a rider, yep.
What about walls, doors?
That's above
We had water
surface
coming
level.
through the wall. Is that the same as the
So,
foundation?
surface level is where the water should usually sit, I'm assuming. So normally, a lot of those downtown buildings have a good 3-4 feet of water difference in like the summertime, right? Most of the time. So if that water comes above surface level, that's when a flood situation. That's what I would take from it. It could be a covered peril. So if it's coming above surface level.
okay, but if you have your ground level here and your water levels here, ice jamming creates this water level to keep rising, 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 rising. You're going to have hydrostatic pressure that's going to push through a vein any place it can find, and you could build 8 inches of concrete. It's going to force its way through. So the flooded water created to bring the water up to the same elevation here. When that water goes down, this water goes down.
So I mean,
That's what the flood guy told me.
Yeah, from my understanding
That
of
makes sense.
every insurance policy that I've sold or that I have an understanding of, wear and tear is not covered, and water seeping in through foundation is not covered.
But when the water comes higher than, if you got 5 foot difference from the water to the foundation, that's what our flood guy is saying. So.
Yeah.
So it might be a technicality, because
Right.
at that point, the original peril is still the flood.
Mhm.
Yeah.
And a flood was declared.
So it's
That
not
helps,
where
too.
if you have
it's a state
seepage
of emergency.
because,
So, I mean,
whatever
it may be
backed
a little-
up, that's a different thing than the flood being the original cause of this.
Yeah, it all goes back to the original cause of loss. Was it a burst pipe? Was it water back up through your drain? Or was it flood that's coming into your place? That's what triggers all coverage. Or wind blows your roof off, or a flood, or water backs up through your drain. It all comes back to that original. Because water's tricky. I mean, you can have water seeping in through, through your windowsill, and that type of thing. It's not covered. Water seeping in through your windowsill. There was now if a tree limb fell and cracked that window, and now there's water coming in, it's covered. We see it all the time. Those the little windowsills into a basement, the cover falls off, and all of a sudden all that water there and it bursts through the window. Unfortunately, those types of things just aren't covered.
Wouldn't the original fault be with the ice? The ice caused the flood.
Yeah, and it is. I see where your train of thought, but the insurance companies aren't going to. If that were on your house and an ice dam caused and separated your roof from your bed, that's covered, but that's at your house. So the damage that was caused down the street that caused all the resulting, that ice movement, if that crushed somebody's house down there, that's going to be covered. But the cause and effect of that thing, of all that water pooling back up, now that's flood. even though it's technically was caused by that ice dam. But that ice dam, if there was a car in the way or a house, that house is going to get taken care of because of that ice dam, cause all that damage.
That causes another question. So when this ice moves again, if it causes any damage to the foundations on these buildings, the ice, is that a property covered?
For the ice itself?
Yeah, if the ice is causing, as it moves, 2,000-pound blocks of ice, causes any damage to any of the facades or the backs
I
of
would
these
turn it
buildings.
in. I don't know if that's going to be covered or not, Tina, but turn it into your insurance company.
Well, like on the house, like she's saying, if a chunk of ice as big as these tables comes floating across,
For
we
sure.
got to hit the side of the house, hitting the front door, that's all.
That's going to be
Structural
covered.
damage.
Yep, structure damage. But if you're talking about that thing hits the side of the door and now we've got 10 feet of water in the basement, that's going to be flood.
Even if they were previously flooded.
Yeah.
The flood occurred first.
For sure. So, it is. Getting back, because I know for the sake of time here, we told you to keep this to an hour. But you guys can see it is so extremely important to understand your insurance policies. And if you don't understand it, you should be talking with your agent, having conversations with them. It doesn't matter if you're a business owner, your homeowner, whatever it may be. You just never know. Unfortunately, we're a town of tornadoes and flooding. So, really understanding your policy is so incredibly important. So to leave you guys with a couple of things, to checking on your policy, water backup, sewer drain. If you have a flood policy, check your deductibles. The biggest highlights from what we're experiencing right now. But we're going to be sticking around after, so we're more than happy to talk with any of you guys. And also, if you want quotes too, we're a local agency. We're here to go to bat for you guys. We have a number of you guys insured in here, and it does help to have some local representation.
I think maybe the biggest takeaway from this might be make an appointment with your insurance company, whether that's next week or 2 weeks from now or whenever that is, just to really understand what coverage you have and what coverage is available to you.
Absolutely. And 30 days is flood insurance, so they have, if you want a flood policy, they make you wait 30 days before it's effective. So if you want to replace that policy today, no coverage will actually even take effect for 30 days. So keep that in mind as you guys are quoting around and, that kind of thing.
I think we want to give a big hand to Simon.